welcome to all of our new members. And we have a really, really awesome topic tonight where we're going to be talking to Donna, who is a rent-to-own expert for sure, and has done several. So
tell us a little bit about your rent-to-own journey. How many deals have you done? We're going to get into kind of the best part about it, if you ask me, pretty quick here, and then we're going to go into the investment. So from an investor's point of view, what are the benefits of doing it, and that sort of thing. But in the meantime, what have you done, and why is it that you can sit here today as an advisor to us and telling us how we should be going about doing this as investors?
Well, I guess just about me is I come from a real estate family. My dad was a builder and had long-term rentals, so quite a few of them. And I actually went into accounting service while my kids were growing up. And then just 2009, I thought I really got to get back into this real estate game because I was only in it a bit. And I actually started flipping. My son and I did it together. And then we got approached from investors. And then we got into long-term rentals. And for myself, I've probably done about 60, I think, renos so far. So we're, 60? You know, 60, because I've done the BRRRR strategy and then did some duplex conversions and some builds. And so been through a few strategies, and I like to have more than one strategy. You know, I still love to do a flip. Long-term rentals are great for long-term wealth. But I found that rent to own was kind of in the middle, and it's a really good market for it right now. I did take some courses and started it in 2014. But here it wasn't all that popular. I did a couple, and it was more in BC and Alberta that it was good. And then in late 2018, I put signage up for one of my houses and got 100 people responding to it. So that's when I thought I need to change strategies here. There was a real need. And since then, I keep updating my strategies like almost like weekly, because like you mentioned, there's new rules coming out July 1st, and you know, people are already challenged getting into a home now. And of course, the stress test previously, that was a big challenge. Right now for tenants, I'm finding that, you know, it could be home or they're new to the country. They might just need help getting a down payment, you know, and because that's part of our strategies, we help them, you know, save for the down payment. Credit problems, they may have just made a mistake. Divorce, self-employment, those are all good reasons to have credit problems. And then I guess just with the new qualification process right now. And then, you know, we go through a really strict qualification process with them, because you mentioned, I heard you earlier saying, you know, how many are going to qualify in the end. And that's our whole goal. We want them to qualify. I'm not taking anybody on, and if they don't qualify, and I've had people over 100,000 income and I've turned them down because I didn't feel they had the right attitude for it. You know, actually that one, they actually had a $90,000 vehicle after their bankruptcy. So I just thought that I don't think they get it yet.
So I have a question about the attitude that you mentioned. So like when you're talking about having the right attitude, how would you describe what would the right attitude be for a tenant buyer?
Well, first I have a bit of a funnel, because they're going to the website, they're going through the marketing, they're learning about it just from the website, and then they have a mini application. So that tells you a bit right there. And then my assistant does the first phone call, and she's a real people person. So she gets their story out of them. They start talking and talking, and that's one of the best things. Like, you know, of course it comes down to the numbers, but, you know, we get into the kind of the why. And then after that, then we get into the process, the qualifying through the credit advisor that I use. And then I dig deeper into it with them, and what are they going to do going forward? Are they willing to change, or, you know, whatever the situation was, you know, that they're in, we need to fix it. And usually we can. And there's a lot of bad information out there about consumer proposals and things like that. So how do you go forward? And some of them are really just companies that are franchises. And this actually was new information to me until I started getting a little more in depth last year. And, they've had bad information and it was not going to fix them in the end.
So the logistics of it, we're going to pick your brain on that in a few minutes of, who do you choose? Why do you choose them? How do you actually help them and make them, make it so that their chances of success in this are good and, all that stuff. But before we get into that, I want to bust out a couple of myths. And I know that, for some, this may not be their experience, but for example, we had someone who signed up for our day on June 27th and said, you know what, I was never interested in it before because I thought it was for, people that just want to take advantage of others. And, but now that I see there's another aspect to it, I do want to learn about it. And that is what changed my mind on it as well. So we're coming into this time period where people are going to need an alternative for getting into home ownership. And if they don't land in our hands, they can land in those hands of people that don't do it properly and aren't out there for their best interest. But from an investor's point of view, now we're long-term buy and hold people, we have been for a very long time. I've never really forayed into that realm, though I'm about to. But, for me, tell me as an investor, why would I want to look at rent to own if I'm already in buy and holds or I'm already doing BRRRRs or something like that? My mindset tells me, isn't that getting yourself in business with someone who's got bad credit and is just kind of going to be a tough tenant demographic kind of thing? Isn't that asking for a little bit of trouble? Like, tell me why as an investor, why do I actually want to get into this?
Well, one of the reasons, okay, you're saying you're a long-term investor already. Some people are new investors, and I have a lot of new investors with me, and it's a really safe strategy for them to get into because, okay, back to the tenant, sure, they had some credit problems, but so do long-term tenants. We usually probably may not dig in as deep into them. For sure, you're not digging into them as much as we dig into our people, because we know exactly what's going on and what's going forward. And we also monitor them quarterly. We monitor the house and we monitor their credit. And the credit advisor has to work with them over the 3 years or else we don't work with them. And so we have a really good tenant and they put money down. So we do take a deposit down and they have money invested in this house. So they are taking care of it. I've never had one damaged. I'm not saying there's 100% guarantee, but if they did, then we do have their deposit. They are also improving the property, almost like we always buy a good property. So it's kind of be like maybe 3-bedroom, 2-bath, full basement kind of thing. That's what I like to have because everybody likes those houses. And if for some reason this doesn't work out, I can sell it to someone else or get another renter. Of course, we have other strategies too. Another reason to do this. You got rent to own, rental, improve the property, sell it. And then we also get the property appraised and then also checked out. And then that person also works with the tenant as well, just to see what they have to do for maintenance. Because in this strategy, the tenant pays for the maintenance. Most of it anyway.
Okay.
Yeah.
Okay.
That one is huge.
Yeah, that is massive. Okay. So first off, my theory of, this being a headache, more of a headache than normal investing, boom, that's gone because they're taking care of the repairs. They're taking care of the maintenance. There is no property management because they manage themselves because they are owners. And they've got money down. They've put a deposit down on this house. They have a vested interest in taking care of it.
Right. Like a deposit more than just like a damaged deposit or a security
Absolutely,
deposit.
yeah.
This is a deposit with a significant amount of money. So they have, So what? Okay. Awesome.
So
around 10,000.
Okay. Around 10,000. Okay.
In your market, is that based on percentages, Donna? So in your market, it
well,
would be
I started off around 2.5%, and we're trying to get a little higher. They put 10,000 down. That gives them a little more flexibility in their monthly payments. That's not as high, of course. And then in our market and maybe Ontario, it's great because now you're not still dealing with residential tenancy branch. Not my favorite people, and also no vacancy. And I just had a couple of houses, damaged last year with long-term rentals. And you could have amazing long-term renters, but just kind of happened at that time that I was converting over to, rent to own, and that was another good reason.
Yeah, I love it. Okay, so headaches go away. There's not as much property management. Repairs and maintenance are taken care of by the tenants. They're often doing improvements on the property in the meantime. Another thing you told me about was your exit strategy. So tell us why, as an investor, a rent to own, again, misinformation. My first forays into rent to own, I thought, are you not capping yourself into a price? And are you not, all that misinformation that's out there. So tell me, why is it great as an exit strategy for us as investors?
Well, you do have a defined exit strategy. You know what it is and what it's going to be, pretty close. You're getting cash flow every month, and you are the property is appreciating, and mortgage pay down. And so in 3 to 4 years, you have a really good return. All our returns are double digit, and that's for the half, you know what I mean? Because we're splitting it as a joint venture. And I'm taking care of everything. They get me. And so we're experienced. We've got the team, and we have all the contracts in place. And that's another reason that maybe sometimes they fail. People don't really realize what they're getting into, and we have all these contracts. They have it all up front. They know what it is that they're getting into. All the numbers are there. And, we have kind of an education process over it. We also have a lease contract in place too, because legally they're still a tenant until they buy. And then with the investor, of course, I have the joint venture agreement, and they're on title.
I want to get to one more point, is that, so number one reason why it's a rent to own is fantastic for us as investors. Like, I'm going selfish. I'm going like, why would I want to do this as an investor? Okay. So selfishly, what are the benefits to me? The benefits to me are, the headaches that go away, the repairs and maintenance are taken care of. They've got money in, they're improving the property. That's some big stuff right there, but that's number one. Number two is your exit strategy is always defined. It is already defined. So you've got a really good idea, rather than having, what a lot of us, we just ride the markets. You've got a very kind of defined plan, which is really nice to be able to calculate, especially when you're working with joint venture partners like you are.
Well, and really just let me speak on that exit strategy. And in fact, for our long-term buy and holds, when we need to exit our property, we usually need to go in and do a renovation. We need to spend some money on that property. We need to hire a realtor. Yes, I'm a realtor. I still hire a realtor to sell my property for me, and I'm paying that out. But in this case, neither of those things need to happen. That exit is already defined. They've been improving the property if they so choose to. That's up to them. And you don't need a realtor to sell it because you already have your buyer. So there's a lot of benefits on that exit strategy.
Yeah, awesome. Okay, and then the last one, number 3, that I had written down from our previous conversation was that, your returns. Your returns are more. So you've already explained that they've put down $10,000, so let's say. So now that comes basically back into your pocket. You can count that off of the deposit that you put down on the house, right? So right away, your ROI goes up because now you're pocketing some cash. What else happens every single month that an investor would love for their pocketbook?
Cash flow. We have the cash flow on the rental side of it, but then we also are bringing in the option payment monthly. And so they have that option if they want to use it. And
how do you set that option payment up? Like, how is that set on a percentage, or you just come up with a number, or like, how do you?
So let's just explain really quickly.
Sure.
So basically, there's a lease in place. You have a tenant. They are your tenant by law, but they have an option to purchase this home along these parameters by a separate document. So that option to purchase they can exercise by putting a down payment down, and by paying extra monthly. That amount accumulates toward a down payment that the bank then sees that they have paid, correct?
Exactly, yes.
Is a suited house an option? So do you think that the tenant buyers would like that they would have a mortgage helper eventually, when they come to own that house. What do you think?
I am working with someone on that right now. He's self-employed. He's a contractor. He actually has one rental house, and so he wants to get into a home for his family and have a rental in it. So with him, I feel comfortable. I think it would depend on the person, because not everybody's cut out to be a landlord.
Right.
And then there's going to be some, more legalities with that too, because I believe I should be the landlord, not him. He can manage it and take in some of the rent, let's say. I think we should share that rent. But as far as completely giving him control, I'm not ready to do that, because it's still our house. And if for some reason his rent to own didn't work out, I still have that tenant in the basement and control, because, I have a concern for them too then. We don't want something to happen to their tenancy. And at least we have the control over it. And then, of course, in the 3 years when it's up, then they can, move on and they'll be the new landlord.
That's brilliant. Yeah, so much insight there, like that I didn't even think of. I don't know about you, but
yeah, very good. You can tell when you talk to somebody that's done it, been through doing these types of things, they know the answers to these questions.
Yeah,
right?
It seems simple, but there's always those little nuances that you don't know until you've been in the trenches. So
Linda asks a good question. Is there deposit? So the deposit that they give to you, does that become part of the investor's down payment?
It can. All my joint ventures were all kind of set up differently. We want to have something that works for both of us. And so that's, something we discuss.
But it does end up becoming something, you don't have to keep it in a separate account and just hold on to it for those 3 years. Is that correct?
No. I mean, it has to be recorded, and I have a separate account that I record everything in, and then we disperse, whatever our agreement is, because I'm open to different scenarios with different investors.
Because you are a good joint venture partner, and you make it work for them, not for you.
Yeah, absolutely. Awesome. And here's the thing is you're combining strategies here. You're combining a rent to own. Somebody can go out there and do a rent to own. That's fine and dandy. But now you're bringing joint venture partners in on those rent to own deals that you're finding, and you're giving them a huge benefit too. So combining strategies together and getting really creative with it, you're obviously doing so. That's fantastic.
Really interesting. So rent to own is also an awesome option, just because so many markets in Canada have become overheated and you can no longer cash flow in them. And so you have to get a little creative in those markets. And doing a rent to own, as we've just talked about, you get, the money down, that helps. And then you also get extra monthly cash flow. But with Donna's deals specifically, I've seen her deals, and she can offer to a joint venture partner at a 50% split on that cash flow, often way more money, monthly cash flow, than most markets in Canada can provide.
Yeah.
And they're hands off.
Yeah, that's awesome.
Yeah, it's pretty sweet. So even as a joint venture strategy, it's a really good thing to be getting into, because you can offer better numbers, better ROI, better cash flow to your partners.
So Donna, before we continue on here, another good question from Kathy. She asks, and this is a question we should ask about anything we get ourselves into, what are the risks and what are the downsides to rent to own?
I guess a risk is, let's say it doesn't go through. The tenant leaves for whatever reason. There could be a million reasons, but sometimes things change. But if they do leave, well, I feel like we have plan B, C, D. Like I mentioned, you could rent it out, get another tenant. I guess they could damage it just like any tenant. But on that side, we also have the damage deposit. The other thing is appreciation, and it depends on your market, because, you can't do it in a downturn. If your market's pretty volatile or if it's going down, I wouldn't recommend that. You want to be in a stable market. That's one of the advantages of Winnipeg, is like our market's been stable, and I have stats back to 1977, and only 2 years did it drop to $2,000. We just have such a diverse economy here, and low unemployment, and we've got high immigration. So it's a great market for that. And then the price point here, average price is $316 in Winnipeg. Most of my rent owns are about $250 to $300 range. And then also, I guess, speaking back to the investor, I have a lot of experience, so hopefully that, helps them feel better about the investment.
Yeah. Absolutely.
So is there a certain, Carol's asking, is there a certain percentage that you try to accumulate between the down payment that they put down and the extra monthly that they pay, so that at the end of the term you've come up with a 5% down payment or a 10% down payment? Is there a certain percentage that you're trying to hit?
We do. It depends on what the credit advisor tells us we need to do for that tenant, because everything goes through him. As much as I've learned about credit, it's not my expertise. I want to use a true expert. And so if for some reason, or if they are in consumer proposal and then they're going to be coming out of it, we have a 2-year period that they have to be clean from that. They're building credit more than, so they will need the 10% down and 2% for closing costs. So let's say they put 10,000 down and they have, I'm just using a number, they have 20,000 balance owing, so, and maybe they're a 4-year term. So then 48 months divided by, 20,000 divided by 48 months is what their monthly payment will be.
So George is asking, so when it comes to your tenant buyers, and I think this is one of the sticklers for a lot of people wanting to get into this strategy, where do you find your prospects? Like, what do you do? Do you advertise online? Do you advertise in the newspaper? Like, how do you find these people?
Marketing, and I don't pay for marketing other than my lady that's posting. We're on Instagram, and it's mostly Facebook and Kijiji, and then that drives them to the website. So then they have a lot of information right there. But they're still coming. Like in May, we had 41 applications, and they're finding us anyway. And I'm improving my websites, and so I'll be looking at a little bit more marketing. But right now, it's been good.
Yeah.
And I don't know about everyone else, but I know that from almost every ad that I put out just on my normal properties, I usually get 1 or 2 people that will say, would you consider rent to own on this property? So even if you're not looking for it, these people are finding you.
Just calling regular, like they're calling from regular rental
ads. Yeah. Or we do bandit signs, so we put out signs for our rentals and stuff in certain areas depending on the area. And I'll get people calling me, is this a rent to own by chance?
Yeah, I work with mortgage brokers as well, because people call them and say, would you consider it? And then they are bringing them to me, and then we buy the house through that or that realtor. The realtors get quite often people asking, but then also back to the mortgage brokers, people are trying to qualify and then they don't. And so if you have a relationship with them, they'll bring me a rent-to-own tenant.
So can you explain whether the RTO tenants are treated as tenants or as owners?
Well, tenant buyer, that's what we call them. They're owners in training. They're owners in training, and some of them might be first-time home buyers. So one of the things we do have is when we get the home inspection, our guy is really, really good. And so they get the report. And then also about a month later, he will come back. He'll charge them about $120, and he will come back and he will go through the house with them. And then he tells them what kind of maintenance and, what this vent's for and what this is not, and just tells them everything about the house. And also all that information is in his original report as well. So then we felt comfortable that the property is being taken care of. And then I do quarterly checks as well. But, and then we just help the tenants along. We have, newsletters and things like that. So we keep in touch with them all the time.
It sounds like it's like a hands-on, hands-off kind of thing. But I love one thing that you said that I really picked up on. You said he charges them $120 to walk through because as an investor, that would normally be my cost, but you're saying, oh, he charges them because they're kind of owners. So I love that. Owners in training.
I love that term, owners in training.
Yeah, it's awesome.
And same with the credit costs. They have to pay for that credit advisor. Even the very first one, we charge for that. To me, you're not committed if you're not going to pay a few dollars to get out of what you're in. And then the yearly fees will have to be paid by them.
I really do. I never believed this before, but I do believe that those that pay attention. And it's because, we have invited and had friends and family more than I can count, probably 30 of them that we've invited to different real estate events when we've gotten a free ticket and whatever. None of them have done anything. The only ones that actually did anything are the ones that actually paid to be there. So those that pay attention. Yeah, for sure. What do you think that the pandemic, factoring in the costs or the purchase price, being there's a pandemic that none of us really know what the outcome is going to be from this, how would you adjust, or would you adjust the purchase price, or how you're calculating numbers right now?
Our market hasn't changed. I'm on top of it all the time with my realtor, and all his listings are going into bidding wars right now. But I think part of that is just being, less houses are on the market right now. But everybody I'm talking to, nothing has gone down in price. And like I said, we seem to be kind of insulated here for some reason.
So if you're doing a reno on this, Donna, so you're doing a reno, let's say before they move in, who covers the cost of that reno?
I'm not doing on all of them, but I have done it, and I buy it then. I purchase it myself with my funds, and I do the reno. I take the risk on the reno, and then I'll bring an investor in on it, because then it's a good home. It's already been renovated. There's no repairs to do. The rent-owned tenant has got to pick out some colors, things like that, and they feel a little more invested in it too then, because they were able to have a little bit of a say in it. And then it's kind of fun when they come, and it's almost like HGTV, and you get to do the reveal, and they come and they're all so excited because they're not just buying a house, but now they're out of an apartment or something, and they've got their own house. And then I usually go back,
right,
and maybe a couple of times just touch up this and that, and then they're on their own. Then the rest is up to them.
Super exciting.
One more question here, Donna. What happens if the tenant buyer decides not to perform maintenance and files at the tenant board for you, for you, the landlord, to do it? Which agreement would hold at a hearing? Would it be the fact that they're the buyer, or the fact that they're a tenant? Hold up. Have you ever dealt with anything like that before?
No, I actually haven't. I did add something new into one of my contracts, because they are, one of my old ones is they're responsible for everything over $500 or under $500 is their responsibility. And we had a furnace kind of making funny noises and stuff, and it was older. And I said to them, okay, we can just fix it. It's going to cost us $160 to fix it. And we can leave it at that, or we could get a new furnace, and then we will add it to the cost, or the price of your house. And we just did an addendum, and they would like that idea, because we put in some money. We paid for the whole thing, but we will get it back once the furnace or once that we sell. But it was something I added to later, and every time you do one, you kind of, something new comes up. And so that's what we have now is if there's something major for some reason, it goes on to, it's like your house is improved now, because all of a sudden now you have a new furnace. As far as our TV goes, I'm told that we have a side agreement, and that's got nothing to do with them. And that's if we have issues, then they don't get involved. Because, it would be different if they were in a, let's say, a dangerous situation. Well, we don't have any houses like that.
Is the purchase price established at the beginning or at the end of the contract?
Oh, no, they know exactly what they're buying. And that's, we want to make sure it's a comfortable price for them too. I don't want them to be stressed over it. We do a budget with them. We go into everything with them. And the good rent-owned tenants, maybe my credit advisor says they can qualify for, 320, and most of them want to stay maybe at 280. And so then we know that they're comfortable, they're saving enough for the qualification. But then also when they go to qualify, let's say it truly would have been about a 280 appraisal, but because now they've added to the property, they've got some equity into it as well. And so that kind of helps them as well.
Sha, have you heard that if the house is appraised lower at the end of their term, that you can lose the sale because they could take their deposit money and buy a different house?
Well, no, they can't with our contract, but we've never had one appraised lower. I just feel like if it came in 5,000 less or something, well, whatever, we sell it for them 5,000 less. I don't think it's a huge difference, but we've never had that happen because we're always being very, very conservative on our selling price.
Yeah.
That's awesome. And you know, you mentioned also paperwork. You have the right paperwork in place, and that's really what all of this is about, is doing this. You know, you have to have your ducks in a row. You have to make sure that you're signing the right contracts, you're using the right contracts, you're making sure that everything is signed by both you and by the tenant buyers, your lease agreements, all that stuff. You got to make sure your paperwork is right up to snuff. And then, you know, everybody's happy, everybody's protected. There's no big surprises. And I liked as well one of the comments that you made about the furnace. And you obviously have a good relationship with your tenant buyers so that you can call them up and have that conversation and come to an agreement and make changes if the need arises, because you have a good relationship with them. You know, that's possible to do. So that's really cool too.
Let's talk a little bit more about that kind of social component that you have, this spin that you have added in and started to really niche into, which to me is just phenomenal. So tell us a little bit about who your tenant buyers are, how you've been niching down, and how is it that you're able to help them and change lives there, and just so cool.
I guess a couple of different areas is people now in consumer proposals, we're really, really helping them with that and changing their direction because they were maybe on a wrong path because they got bad advice or no advice. And we're doing that. We have like free workshops as well. We have 5 free financial workshops that are online now. We have a free financial advisor that helps them. And then of course the credit advisor that they have to pay for. So we've changed that with those people. And then also new immigrant families. We've gotten mostly in the Filipino community that, and then of course word of mouth. Now they're telling their friends and helping them, and just, you know, then they have a different view on houses and things like that. And, you know, and that's when we started coming up with home manuals and that, because maybe you came from a place that had no winter like ours and they didn't know anything about turning on heat and things like that. And we work with them as well. And like I said, I love to get word of mouth, and that's a good way to get another tenant.
And I love that, you know, like you're not just, you know, I mean, you're helping people, but why, especially new immigrant families, why do they especially have a hard time getting into home ownership here? Because it's the stats say and the numbers say that they actually have, you know, less debt than we do as Canadians. You know, once they've been here for like 4 years, their net worth outweighs ours. So why is it that this has become a little bit of a niche for you? How is it that you're jumping in?
I guess some of them are just partly saving the down payment. One family I have, it was 5 of them in an apartment for 6 years, and they just couldn't save for that down payment. And then they almost qualified, but then she went on like part-time, and so the bank would not qualify them for that. And they had a little bit of a credit problem. The feedback I've gotten from them that credit wasn't easy to get in the Philippines, and it's a little easier here, so it can be something you fall into. Just, you know, you can buy things so much easier and just put it on credit. And no matter who they are, some people just are need help learning about credit. I mean, Canadians do too. How to make all this work. How do you qualify for a mortgage and things like that?
So walk us through the process from you find a house, you go out and you find a joint venture partner for that house to purchase that house with you. No?
Well, starting with the tenant, you know, I go through all that qualifying process I mentioned, the financials and blah, blah, blah with that. And then I get my realtor to start finding a house for them. And we have a dream house list for them. So it's really what they want. On the other hand, then I have investors that I've already developed a relationship with, and we've been discussing it. They know what rent to own is about, and I'll give them a tenant profile and what we're looking for this, excuse me, for this house. Maybe 250,000. We need about 55,000 down. Where it's going to be a 3-year term. Here's the tenant profile to make sure that they feel comfortable with that. And then when we find the house, we start. Now they have to put the deposit down before I put in an offer. And
the tenant,
yeah,
the tenant
Yeah, the tenant has to give us their deposit because I need to know that they're serious. Otherwise, I wouldn't be buying this house. And
Right.
then that's when the investor can buy. They can put the down payment down, and then I help them through the process too, especially if it's a new investor, because I have great mortgage brokers that I work with, and just go through the rest of the process. And then everybody moves in, and we start collecting money.
Okay, so when they move in, upon day of move-in, they move in with a lease that's in place, like a regular residential tenancies agreement lease.
Yes.
And they also move in with a legal document that they have signed and you have signed that says, at the end of 3 years, you have the option to purchase this house for this amount of money. And in order to keep that option, you are going to pay an additional $300 a month, let's say, or $400 a month for that option to purchase. Is that correct? So it's two separate pieces of paper.
Absolutely. And we also do a condition report too, on the off chance that they do move out. I need to know the condition they moved in at and the condition they moved out at, and we would charge them for any difference.
Okay.
So do you
Awesome.
you collect a deposit for their purchase, like a deposit for that? Do you also collect a security deposit or a damage deposit for their lease as well?
No. I think it,
Okay.
because we have a deposit, so that's good enough.
Yeah.
So
Okay.
Donna, thank you so much.
Yes, thank you, Donna. Awesome information.
Such good information. And I love the fact that you've, been able to take this, like you've been investing since 2009. And you've really been able to kind of, take this in the last 5 years and make it like your niche. It's what you do now, and that's what you focus on. And all of the marketing that you've got behind it, it didn't happen overnight. I know even since we've known you, you've been improving your systems and making things better. And it's just one of those things that you got to start somewhere, and you started, and look at you now.
Well, thank you for having me on. Like, this group is amazing, and I've gotten a few investors from this already, and 4 podcasts now, all because of Fearless. So you guys set the standard. So everybody has been awesome on here, and so many friends now too.
Well, thank you for being so willing. That's really kind of you. So, and just sharing your expertise. I mean, it's one thing to be out there doing this thing. It's another thing to be able to teach others, and to be able to share your ideas and share your experiences with others, because it is so helpful. And all the things we learned about today. I mean, here are the highlights. I'm going to mention the highlights for me. Okay. You have extra cash flow on your properties because of rent to own. You have part of your down payment supplemented by the tenant buyer. Who wouldn't want that?
No maintenance.
You have no maintenance and repairs because your tenants are taking care of that.
No vacancy.
Your vacancy, you don't have to build in a vacancy allowance because your buyers are going to be buying this home from you. You have a clear exit strategy at the end of it. There's so many positives from doing this strategy, and the fact that people are going to have a more difficult time to qualify for mortgages coming up here over the next several months, after maybe July years. 1st, this is going to be a more and more popular strategy. So if you are a real estate investor, if you're watching this now and you're a real estate investor and you want to scale your business, this is a strategy you need to know. Whether you employ it or not, up to you, but it's a strategy you need to know and be aware of.
Okay, take care. Thanks everyone.
Thanks everyone. We'll see you next week.
Tuesday for agreements for sale. Cheers.